Hey traders, a very warm welcome to you. So in this video we're going to talk strictly Forex scalping. So if you're a swing trader, this will not apply to you. However, there is an edge to be had with taking a scalper's entry, taking a few ticks out of the market and then perhaps leaving it to mature over a few days if you're in the right position. But that's not something to discuss in this video. I really want to focus purely on scalping. Now, there's a few definitions out there with scalping. For me, especially if you're trading the currency market, scalping is taking like 10 ticks out of the market. That for me is scalping, maybe a little bit less. But again, you've got to be a little bit cautious with your spread that you're not overdoing it. You're not getting too aggressive. However, there's some flexibility. That's the beauty of scalping. You can take a quick 5 ticks. If you get it instantly, you might grab it off the table. You might take half your position out, take half at 5, at 10. Anyway, let's get into some details further down the line. Let's talk about strategy. So for me, I scalped very, very actively 7 years ago or so. I'm not so active anymore with scalping, but crude oil DAX were my big scalping instruments that I traded. Like I say, far less aggressive with my frequency these days. Prefer to kind of pick and choose my levels a bit more. But let's look at it from a perspective of what techniques we're going to use. What are the pitfalls? What are we going to look out for? What are the kind of good ways of approaching it? From my opinion perspective. Again, it's not advice. It's purely a personal thing. So you've got kind of 3 choices to make if you're trading. One is that you're staying out. The other one is that you're fading momentum pulses, and the final one is you're following momentum, assuming that momentum is going to continue. Now, for the majority of the time, scalping for me is a 1 minute chart. Some people may say no, scalping is a 5 or 15 minute chart. It depends how you define it, right, guys? Some people who are used to really longer term trading think that holding a trade over 6 or 7 minutes is scalping. For me, that's almost scalping. Let's say an hour. Now, that's not scalping. For me, that's a day trade. Scalping for me is 1, 5, maybe 10 minutes, depending on how volatile the instrument is. Maybe even 15 seconds if you're really getting on some volatility. And that's the point as a scalper. You're looking for those short-term inefficiencies. Now, some people say that this is a really hard way of making a living. I agree. It's very, very tricky. It's a challenging way of doing it. However, in the right environment, it can really suit you if it's your personality type. So your decision is, for me, the best way of approaching is say, hey, I'm going to segment off my days into this specific structure. So if you're trading currencies, you might trade it from 8 o'clock in the morning till 10 o'clock in the morning to coincide with the FTSE and European Opens. So you're going to trade the GBP pairs, the Euro pairs, that kind of thing. Then you might shift to the US dollar pairs on the US Open at a kind of 2:30 UK time, whatever local time it is for you. Or maybe some of the Asian pairs as you move into the early hours of the morning UK, depending on where in the world, obviously. But you kind of want to decide whether you're going to trade momentum or counter trend. And the danger with scalping is you can get too caught up in just literally the noise of the market. So you need some kind of structure and strategy. And one thing you might like to do is you might like to fade fakeouts. So in other words, when the market kind of tries to push to a new level and it just stalls, you take a counter trend trade. But the point is with scalping is you are very, very, very strict with your stop loss. You probably haven't got time to put the stop loss in, but you know what? You have to be like iron discipline. If it's not working, you're out. Because the danger is, let's use an example here. I don't know what day we're on. It doesn't matter. It's just a purely look at a chart from perspective. This could be any chart. It happens to be GBP USD. Let's just clear off some of that stuff. So you might be saying, you know what, I want to fade momentum. So you're waiting for an initial move to happen. You're waiting for a second move, all on a 1 minute chart, all within kind of 15 minutes, guys. It's really tight stuff. Then you're looking to fade that for a push back up because you think that it's not going to break yet, or not in a trend environment, whatever it may be. If you're taking it along at that level, let's say this is example here, you need to be strict that if it doesn't bounce straight away, you are out. The premise of your trade must happen immediately. So you're going long as it breaks through this low here, great, you get a few ticks out of the market, you come out. It pushes down again, you go long again here, you take a little bit of heat, but you're very, very careful with it. It pushes back up, you're out. That is the point. You're not holding it for any long period of time. Now, what you can do is kind of be a little bit less aggressive and say, okay, I'm going to take these kind of trades, these counter trend mean reversion trades, You know, I think we've pushed up a bit too much, we've pulled down a bit. I'm just literally trading these kind of pulses, the volume bursts, fading the volume bursts, being very strict with it. But you can also say to yourself, listen, the first impulse, I'll take some out. I'll take half my position off, and then I'll look to ride the second half of the position. You know, there are options you've got. Another one could be, let's say here, it's same strategy. In other words, you're looking to fade breakouts, because most of the time, guys, market's going to chop around, it's going to probe key levels, it's going to push through a little bit, come back, especially if you're trading on a very short-term time frame. So you're going to be shorting this. I know it looks like we're cherry picking it, we're just literally picking it out here, and let's look at something in a minute where we take a loser and how that compares. You're literally waiting for the market to push up through the high. It stalls, it doesn't continue, you go short, you're very, very strict again. If it rolls over, you're scaling out into the trade as it goes in your way. And if it goes against you, bang, you're all out of the position. Let's look again and say you were going to trade as we broke through this low here. So you go short. As soon as it kind of stretches against you, you've got to be out. Now, how big that stop is entirely up to you. You know, you can make that a few ticks, probably too tight. You can make it 10 ticks, probably a little bit better. Depends on the average true range of the day, depends on the time frame you're looking at. It depends on a lot of those things. But my main concern with scalping is that you don't get caught. You're not going long here looking for a fade push back up to here, and all of a sudden it just rips down, and you know, it takes 5 or 6 minutes to undo all the trades. So you've got to be very, very strict with it. Okay, let's undo that, and let's scroll back and let's look at something, other stuff we can do. So we can do a momentum type trade with scalping. So if we're looking to fade little probes, and we're just looking to, you know, get onto spikes. And another thing to mention, guys, if we're doing that, candlesticks are our best friend, because we can literally say, I want to only get involved when I see tails and wicks. Tails and wicks, tails and wicks. Don't want to get involved in a solid candle. I know that, you know, a candle is very kind of nominal in terms of how the time frame is, but ultimately if we can say, listen, if there's a change in sentiment in 1 minute and I get involved in it, then at least you've got something on your side. It could be potentially that we might roll over. So, you know, solid here, solid here, solid here, a little bit of a wick there, a little bit of a wick there. You know, there's one that you may have taken short, but you're out straight away. Okay, here's one that you push up, you might have taken it and been stopped out on it, or you might have waited until you see a first red and roll over. You know, we could go into so much depth about scalping, but however you do it, the main thing is ironclad discipline. Just ironclad discipline. You're looking for, you know, that quick move. It's got to happen quickly. Take this trade out, bang, get out of there, look at the next one, take the trade out, bang, get out of there, next one. And splitting your day up into segments. So saying, this is my 2-hour window, take a break, 2-hour window, take a break, and try to put your focus time, your screen focus time, when you're expecting there to be volatility. Or if you're fading momentum, then maybe you don't want volatility. Maybe you do want a lunchtime chop because you want to fade that kind of extreme push, that stretch, get short, wait for retracement. Or if you're looking to get on momentum, like you're looking to buy a pullback sort of thing, you kind of want to wait till there is momentum. So that's going to be the opening period, that kind of thing. Wait, first pullback, get on board, jump out, push it out as we push to highs, very, very tight with your risk. So that's my take on scalping, guys. Not too much depth about strategy because we could go a lot more detail, and perhaps in future videos we'll talk about how there are specific strategies that we can employ, and perhaps indicators that are very much more useful for scalping. But my kind of first video on this topic is literally very careful. Don't get involved in it unless you have ironclad discipline, because without the discipline you can undo several good trades by, you know, not taking the stop, not taking the loss immediately when you're wrong.